Good afternoon, everyone. Hi, Paul. And
Hi,
so
Saj.
for those of you who don't know me, I'm a partner at Centricus. Sajid Javid used to be the Chancellor of the Exchequer in the UK, and before that, before politics, 20 years of trading experience in banking. It's great to be here with the founder, the chairman, and the CIO at Marshall Wace, Sir Paul Marshall. Welcome to ADFW. And let's get right into it, Paul. So first of all, there might be some people in this audience that, for whatever reason, haven't heard of Marshall Wace. So just tell us a bit about the firm.
We're about 25 years old. We basically do a combination of equity long-short discretionary, which was our original calling, and systematic equity long-short. And we run about $70 billion, completely global, 60% now of gross assets in the United States, like the market index is. We have offices in 7 places around the world, and we've just opened, which is why we're here today, I think, we've just opened our office in Abu Dhabi, which we're very excited about.
Well, congratulations
Thank you.
on that. And you'll know there's many, whether it's hedge funds, finance companies, all sorts of companies moving to Abu Dhabi. So first of all, what have you set up here, and why did you choose Abu Dhabi?
So we're starting small, but I think we're going to grow pretty fast. From here, what we're doing is public equity investing in the region, and that includes India, and this is a very natural place to invest into India. The head of our emerging market strategy is going to be based here, is here, as of 3 days ago. We're also going to be doing digital finance. We have a growing digital finance business, both in terms of privates and trading tokens and investing in digital crypto credit markets. So that's all going to be here, and I expect it to grow fast.
A lot of discussion recently, especially in the last few weeks, about digital assets. I think especially on the back of the US presidential election result. I know that Marshall Wace has been looking at digital assets, investing for a long time now, but just a word about how you're positioning yourself with digital assets, and what difference do you think the election of Donald Trump makes to the asset class?
So we started off about 3 years ago investing in what we call crossover digital assets, so the ones that were poised to be listed on public markets, because public markets is our original calling. Our timing of the fund wasn't very good, but actually even though the timing was poor, the investments have done very well. But it was initially targeting companies that would be coming to market quickly. Some of them are now going to be coming to market in the next 6 months, which is exciting. But then we've evolved it to be also encompassing trading of crypto tokens through this fund and in credit in these. So the credit markets for crypto are very attractive, very high yields, and that's a small business, but it's going to be one that grows fast, in our opinion.
And what difference do you think the US election makes?
So for crypto specifically, obviously it's very exciting. Trump has appointed, as we know, Paul Atkins and David Sachs into that space. They are both crypto believers. It's a very big contrast from what happened under the Democrats. If we understand Mark Andreessen correctly, a lot of crypto founders were actually debanked, so it was actively discouraged. So they're going to be very embracing of this market. And I think it's very, very important strategically what happens in the United States, because there are different models of embracing crypto. The key difference, perhaps, is your attitude to CBDC, where some countries will use CBDC as essentially only a central bank instrument, and effectively an instrument which will increase social control, and other countries will seek to have a much more liberal approach to how they use, how they allow digital currencies to circulate. And we're very excited. I think Jeremy Allaire is speaking later. We're invested in his company, but stable coins are a very exciting area. Abu Dhabi is one of the pioneers of stablecoin, way ahead of the UK, for example, who still haven't passed a stablecoin law. And the US, I think, will have a stablecoin law either before inauguration or quite soon after. That opens up a much more liberal attitude to the way currency works in the economy. It allows decentralized versions of currency, of digital currency to be used by the private sector, rather than relying on the central bank to drive currency adoption. And so that will be an alternative model to what everybody else is doing.
And did you say earlier, I think you said that in Abu Dhabi you will be doing, some of the activity will be around digital coins. And will you be sort of running that activity out of Abu Dhabi now? Or
between Abu Dhabi and London. And I wanted to say a word about why Abu Dhabi is such a great place.
Absolutely, let's hear it.
The time zone, which actually is as good as London, if not better, because you really do encompass all three regions. B, the tax, and obviously I'm making comparisons with London because we're both Brits. You're a former chancellor, responsible for some of the things that have happened. But Britain, if you look at the tax rates, income tax, Britain 45%, Abu Dhabi 0. Corporation tax, Abu Dhabi 9%, Britain 19, just recently increased to 25. Capital gain tax, Abu Dhabi 0, Britain 20, just gone to 24. So in terms of tax, Abu Dhabi is absolutely nailing it, and is a very, very attractive place. But then the other thing is regulatory clarity and regulatory dynamism. If I compare this country, the Emirates, with what's happening in Britain and Europe, it's just night and day in terms of the speed and the inventiveness of the regulatory framework. Basically, Abu Dhabi had a framework for crypto by 2019, and stablecoin the same year, or even 18. Britain just introduced the framework this year, hasn't got a stablecoin law. So basically, Abu Dhabi is leading the way, along with maybe Singapore, maybe Japan, in terms of regulation, and is really doing incredibly well.
Well, first, I just want to say a lot of those tax rises you refer to in the UK happened after I left office, so just for the record. But seriously, what you're pointing out there absolutely is that the world clearly is globally competitive, whether it's finance or broader economic factors. And as you say, Abu Dhabi has taken a lead on many of those issues. And probably, would you agree, not just the UK, but if you look actually at Europe sort of more generally, when you look across the UK into whether it's France, it's Germany, other big economies, even some of the smaller economies, aren't they facing similar issues, and how are you positioning yourself for that?
So yes, UK and Europe I bracket together. UK could have diverged in terms of having more regulatory dynamism, but hasn't. And the EU has really shot itself in the foot, both in relation to AI and digital assets in terms of their regulation, which is very restrictive. And really the US is leading almost the world on almost everything in relation to innovation. There's a few things happening in China which are exciting, but the US is really where it's at. Europe is, there's the saying, US innovates, China replicates, Europe regulates, and that's where we are. And so in terms of Europe, it's still from our point of view, a very good alpha market in terms of market inefficiency, but it's not a great market for beta. Of course, that's understood by the market, that there's a huge valuation spread now between the US and Europe in particular, but I think that is deserved, unfortunately, and it's not going to change.
And in terms of sort of navigating through these markets, you refer to, obviously we talk about digital assets, we talked about, you just referred to AI. And, as we speak today on the globe, we've got two shooting wars going on. We've got a Cold War, a trade war. There's climate change issues and many other sort of issues. Let's call them broadly big geopolitical issues. How are you sort of Marshall Wace? How are you managing all this uncertainty?
So our day-to-day job is obviously extracting alpha at the stock level. But in 2008, we had a rude surprise because we neglected the macro. So so immediately after that, we introduced a strategy team and a macro team. So we actually spent quite a lot of time trying to understand the macro, which is essentially about obviously understanding tail risks and where they are, and not ever getting caught by surprise by anything happening in the world.
And one of those big changes, I think fair to say, going on in the world today is, and you referenced it earlier, is artificial intelligence.
Yeah.
It's been a big topic of discussion already at ADFW. And I happen to think, I think like a lot of people, that the artificial intelligence, it's a real revolution. I think there's going to be no aspect of society that's left untouched by it. It's going to be very profound, at scale, and very fast. And do you share that view? And if so, how do you, again, a fund as successful as yours, but looking to the future, how do you position yourself for that with the sort of profound changes that aren't sort of 10, 20 years away, but perhaps only a couple of years away?
Yeah. So first to say, we were fortunate in the sense that for over 10 years have been invested in machine learning very heavily. It drives all of our systematic decision making. So we had a lot of the infrastructure in place for artificial general intelligence when that emerged in the last 18 months, 2 years.
Yeah.
And I can only judge what's going to happen in the world by what's happening in our own business. And we're seeing it's transformative in all parts of the business. Coding is where there is the most amount of use cases, but it's clearly impacting everything to do with processing data and language everywhere across the firm. It is leading to very significant productivity changes. And of course, most importantly, in terms of our investment approaches, we've embedded all the large language models, and we are inviting all our teams to innovate, come up with new ways of doing pattern recognition, and we're seeing innovations every day from all across the firm. So it is transformational for us. And the investment business is going to become a very different business. All of the kind of mama papa shops where you relied on the single team to do kind of traditional analysis of a balance sheet in a company, they're going to be, and unless they invest in technology, they're going to be left behind. So fund management is becoming much more capital intensive. You're having to invest in this, and the winners will be those who do invest, and the losers will be those who don't. And that, of course, applies to every other business across the planet. So one of the biggest challenges of a stock picker now is to work out which companies are using AI well and which are being left behind.
Yeah, look, I agree with all that. And perhaps the last question, just leading on from that, given the set of profound changes that are coming from AI, when you look across the world, you look at different economies, which ones do you think, or ones do you think are sort of well-placed for the change to take advantages of AI and the increasing productivity and all that, and which ones do you just think just haven't shown that inclination yet?
So I think this is kind of like a third industrial revolution. It's of huge magnitude. But I also think that the US election was probably the most important geopolitical event since the Berlin Wall came down. And because it's a complete reorientation of the US. For a whole host of reasons, the US dominates almost all of the industries where there is big innovation and new things happening. And they are going to win. I don't think there's any question. And what they will set an example, and it'll be up to other economies, the extent to which they follow that example, or the extent to which they restrict themselves and impede their own innovation. Europe is in a very bad place in terms of its failure to innovate. Britain has kind of got a unique opportunity that they could turn towards the US, do a NAFTA deal, become part of that exciting story, or they could just stick in the slow lane. China and Asia obviously are different. There is a lot of innovation going on in Asia, actually much more willingness of some governments to embrace this. I think Japan is well-governed, well-placed, Singapore obviously, and China itself is very strategic, and their issue, as we all know, is the fact that the US attempts to cut them off from the most advanced semiconductor technology. And so they'll be able to compete in a lot of traditional manufacturing and advanced manufacturing, but not necessarily in some of the areas where the US will lead.
Look, absolutely fascinating, all of that. Unfortunately, we have actually ran out of time. We could have gone on for ages.
Oh, yeah.
Thank you very much, Sir Paul. It's great to be up here with you. Thank you so much.
Thank you, Sajid.
Thank you.
Thanks.
Thank you all. you.